All right. How's everybody doing? Okay, we guys, welcome back to another week on Crypto This Week with me, Crypto Adnan, on your favorite crypto channel, Crypto Adnan. I hope everyone's having like a good week. Um, I myself have been having like a kick-ass week. So really excited for this week's program. Guys, I really look forward to doing live streams, Um, and just this week, earlier this week, I had done a live stream on creator.club. It's this platform that enables creators like us to actually, build a community over there and like actually, start owning your community over there, which is a fantastic thing. And they had this. Like an annual event where I spoke on day two, and it was amazing. I'll leave a link in in the description below of this. Basically, I gave a talk, a 1 hour talk on how to build a sustainable crypto portfolio, and it was amazing. I love the community over there. It's completely created with Web3 and crypto, people who are enthusiasts, people who want to build on that platform, people who actually want to make change happen, and it's amazing. Yeah. So this week, what I will be doing is I'm also streaming this live on Creator Club as well. So I have a channel over there. So if you guys want to show some love, go there, type in Crypto Adnan and follow me, I'm quickly just going to check if the stream is working fine over there. Yes, it is. Awesome. Okay, so guys, as I told you, man, like I am always so happy to like do these live streams and get so excited. Like yes, like let's do this now. Um, and here we are. So without further ado, let's get started in this week's crypto this week. Okay, so this week we have a lot to talk about. Obviously, we're going to start off with the market watch and how that has gone. Oops, I got a little bit. So the market watch, yeah, guys, I can't really see that well without my glasses. Take a look at what the top 10 cryptocurrencies are doing. What's the market cap been like? Has there been any shift in that? Look at the top gainers, top losers. And then this week we have, drum roll please. Ta-da! Yeah. So we've got a special on Bitcoin and Ethereum's volatility. Some news reports that's come out on maybe the US inflation is gonna get better. Let's see. Uniswap's 165 million funding, which has come in. Then we obviously have September's CPI data, which came out a day after our last live stream last Wednesday. Looking at smart money and what is it doing in this week, and finally we have a little bit of a new coin out there, which is possibly termed as the Solana killer. So whichever section that you guys are excited about, drop name that section in the comments or in this thing in the chat down, whichever wherever you're watching it on YouTube or on Creator Club. Okay, so without further ado, let's get started with the market watch. Okay, and you can see I've got better at this smooth transition transactions. All I think is transactions. Okay, so let's get started. We have 21,401 cryptocurrencies out there. Again, um, uh, you know what my stance is on this. We are going to have only 300, 400, maximum 500 cryptocurrencies that will actually be useful. Exchanges 525, market cap. Let's have a look at the market cap. Do I have it open? Do I have it open? Yes, I do. last 7 days, but stayed about the same. 926, not 920 billion to 926 billion. Hasn't fluctuated that much, guys. I mean, in terms of the whole week, but throughout the week, yes, as you can see, it also dipped down to. I think this was Thursday. I think this was after the CPI uh, numbers came out. It had dropped down almost $40 billion. Recovered quite quickly, and then continued to stay in the same stable zone. There's a lot to talk about Bitcoin and Ethereum today, so I'm gonna like zoom past this section. Uh, Moving back, we've got the 24-hour volume of 53 billion, which is about 6%, 5.5% of the total market cap, which is okay. No, nothing much really to do there. Bitcoin and ETH dominance. Oh, I don't think it's gonna be any serious change here. 40%, and as we can see, yeah, close to the 40% mark throughout for Bitcoin, and Ethereum's like still at that 17.5, 17.2% market cap. Other ones we have Tether, USD, Binance, XRP, Binance USD, oh sorry, BNB that was, followed by Cardano, Solana, Dogecoin, and then the remaining others. Okay. So, where are we? Oh, okay. So if we look at the top 10 coins, yeah, let's take a look at this. So from us, oh, no, my bad. Okay. Yeah, so in our top 10, we have the Itsy Bitsy Bitcoin, 17100, sorry, 19100, um, having a 0.3% change over the last 7 days. Ethereum at 1,297, pretty much the same from last week. USD, USDC, no, not really interested. BNB also pretty much the same. XRP down 7.53%. But guys, it is up quite a bit. If you have been watching the previous streams, you would know that XRP has been pumping quite well over the last couple of weeks. If you look at it like from a 1 month perspective, yeah, it's gone from almost 36 cents, went up almost to 53, 54, and now currently at 45 cents. Super excited for XRP. Okay. Um, Moving on, Binance USD, whatever. Cardano down 10% from last week. Okay. Solana down 4.23% from last week at $30 right now. Dogecoin at down 1.72%. Its market cap has fallen down to $7.8 billion. And Polygon in number 11 is actually very, very close to reclaiming 10th spot. It is currently at, it's up 7.97%, 8% roughly from last week, to 86 cents and market cap of $7.5 billion. Okay, interesting to keep an eye out on this. I think most probably what's going to happen is Doge is going to continue to drop while Polygon keeps rocketing up. Okay. All right. Continuing on from this, let's look at the top gainers for this week. So at number one position for the top gainer, we have Casper, which is up 24.46%, followed by Quant at 20.74%, and Huboy token continuing on their little bit of a pump from last week, and a couple of weeks ago actually as well, up 20.16%. Not bad, not bad. I'm super happy for Quant. Again, one of the coins that I'm super bullish on. keep an eye out, guys. Very good project, part of the ISO 222 coins. So definitely, you should have some in your bag. All right, not financial advice. Okay, looking at the losers for the week, we have Terra Classic USTC, Ethereum proof of W. Not really interested in them, but down 29.42%, down 19.494%, respectively. Clay, Clayton, Clayton down 17.48% as well. Other than that, we got the Terra Classic LUNC ticker, Convex Chain, Axie Infinity also down about 10%, Near Protocol down 10%. There have been a lot of people asking me about, can I do my under 60 seconds on Near Protocol? So I have a couple of them lined up. I had one XRP one as well. That's the most asked one. But I didn't really like it that much, so I had to just go back to the drawing board, rewrite it, and um, yeah, it's short now. It's in post production and should be out soon. All right. I think we've covered the top gainers and the top losers. Yeah. Okay. So now moving into the next big thing, we have Bitcoin and Ethereum's volatility. Okay. Where's it gone? Okay. All right, Bitcoin Ethereum technical analysis. Bitcoin ETH moved past key resistance level on Tuesday. So, guys, this is news from the past week. So this is from the from next previous Wednesday all the way to today. So I've tried to kind of align them chronologically to give you a better understanding, but it gets a little confusing because the reason being is the media right now is flip flopping so much. It's ridiculous. There's an article that will come out that Bitcoin is on the up and up. Five key reasons to look at that, and then the next article is that, hey, uh, it's on a downward trajectory. So, anyways, let's try to cut the fluff out through the whole thing right now. Okay, Bitcoin was trading at its highest level in the past 5 days on Tuesday as prices rose past the key resistance point. Ethereum also rallied to a similar milestone earlier in today's session as cryptocurrency markets continue to move away from the recent bearish sentiment. As of writing, the global market cap is trading 0.38% higher for the day. Okay, so like just focusing into Bitcoin for now. Bitcoin moved to its highest point in 5 days on Tuesday as bearish sentiment began to gradually fade. Highest point in 5 days on Tuesday. So it says here BTC USD hit an intraday high of 19,667 earlier in today's session, which follows up from Monday's bottom of 19,427. But as we can see right now, Bitcoin is trading at, I think, 19,100, 19,219. So I don't think, uh, definitely the bearish sentiment is still there. This is in a very short term price action movement that we're looking at the volatility, because there's actually not that much volatility right now in the market, because you know that Bitcoin is either going to move up to like 22 or down to like an 18. We're just still waiting for that big drop or that big pump, which will come uh, at some point. But the major prediction is that yes, there's going to be a big dump down to the 14, 16K price points, looking at the chart, today's move comes as a 14 days, which is a 2 week relatively RSI, continues to trade above its ceiling of 48.5. So if you look at here, we try and like, oh no, no, no. Okay, I hope I haven't lost my. Yes. Oh, it's there. Okay, awesome. Uh, Open image in new tab. So as you see, the RSI is above the, this close to the 40 to the 2 week RSI is dilly-dallying around the 48.50 mark, which means which they're trying to say in the short term, the bearish sentiment has actually gone away. Um, yeah, despite the slight decrease in price, bulls are likely to continue targeting $20,000, which hasn't been hit since October 6th. In terms of a very short term, I don't. This is why I don't trade that much, especially now. Is that right now, in terms of your market movement, uh, there isn't that much that you can actually predict even in a short term span. And your right now your market movement is about, in a day, should be not more than like maybe 2% or 3%, or even if it is like a 5% move, it can be a 5% move. $1,900, 5% is about 850. Yeah. So you're looking at it around as a 5 to 6% movement right now in the market, as the maximum that you can have. But also, it's not like a straight up pump or a straight up dump in that 5%, 6% movement. It's throughout the day, it's gradual, unless and until there's a big uh, news flash that's happening. Like, for example, the CPI data numbers coming out can predict. Again, not necessary that the market will slightly dump or pump, but if it starts dumping, you can expect it to actually dump that 5 to 6% mark. So, fun tip for people who are trading out there. Okay, Ethereum. Ethereum. In addition to Bitcoin, Ethereum was mostly higher on Tuesday as the token continued to trade above $1,300, currently at just under. Okay. The ceiling of 1330 has mostly been in place for the last 2 weeks. However, ETH USD has moved lower since the earlier breakout. Okay, let's have a look at this as well. Open image, new tab. Let's have a look at this image as well. Thirty thirty. Okay, so this is your 2 week little period with this 1330 mark not being broken as yet. Uh, could be like a small cup and handle formation that is coming out here. But again, we need to see what the next couple of weeks also brings in for this. Just continuing on with that article, should bulls overcome this current turbulence, the next target for Ethereum traders will likely be a ceiling near $13,118 region. Okay, so see, there you go again. If you do the math, quick math, uh, 1330 to this thing, 15, about 3 to 4%, not even 3% is would be your price action movement from your 1330 to 1380. Correct. All right. Moving on to the next thing, crypto market consolidates as open interest remains through the roof with short sellers. So again, so you see how the first article is saying that okay, there's not much volatility, but the next article is saying we're ready to push this price down. There's so much open interest with people shorting Bitcoin because I think the sentiment is also that it's gonna drop to about 40, 14 to $16,000. I think somewhere around that 15,000 mark, 16,000 mark is where you're going to see a complete big bounce. But yeah, basically, uh, everyone's very optimistic that this price drop is going to happen, and then that this doesn't make this not doesn't come as a shocker to me. Okay, the cryptocurrency sector seems to have entered calmer seas as most of its large assets, including Bitcoin and Ethereum, haven't recorded major changes in prices in recent weeks, along with the global crypto market cap. Yeah, it's been around the same. Da, 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 da. In Okay. Indeed, both Bitcoin and Ethereum open interest here on the largest crypto exchange, Binance, have soared, with Ethereum's rising 10% since the end of September and Bitcoin's as much as 20% at the same time, as Finboard earlier reported this website. But the Ethereum one does make sense. 10% since the end of September. That was when the merge kind of happened. There was a lot of news around Ethereum, and there was a huge positive uh, PR as well going around it. A lot of news of Ethereum in the market that time. So I do. Um, understand that. And bitcoins as well, as I mentioned, like the open interest for shorting bitcoin right now is, as I mentioned, that there's this huge conversation going on what is bitcoin's bottom as yet. Have we reached it? And if we haven't, is it $14,000, or some people even say $10,000? Um, all right, no drama in the market or on-chain activity. Okay. Finally, the on-chain activity for the flagship digital asset has been noted as non-existent, as metrics that track its spending lifespan are down to 2010 levels, near the first conceptions of the price. Oh wow. Oh, okay. So basically, what this means is a lot of people are not doing anything with their crypto, Bitcoin, especially Bitcoin, flagship digital asset. So that makes so much sense. Like people are hodling, yeah. Uh, keep your Bitcoin with you, and just don't do anything. Go for a holiday, lie down on the grass, go for a walk. Don't look at the markets, or like don't get so involved with the markets. This makes sense. Basically, it's saying that there's not that much movement. People are not selling or transferring or doing anything with their bitcoins, because and that's the kind of on-chain activity that has happened since 2010. Like it's at that level, which is very interesting. Very, very interesting. Not really. Storm on the horizon? Okay. That said, when the Pope still believes that the current smooth sailing could just be calm before the storm, at least where Bitcoin is concerned, as its volatility index below 25 historically mean a guaranteed recipe for massive volatility. We don't know what's happening. It could be the retailers who have held on strong till now might start feeling the weakness and the urge to sell Bitcoin, and recover your money, especially with what's happening in the markets right now, with inflation high, CPI not going any lower, um, job cuts happening, and all the signs for the recession. People might start selling, and then that could lead to a massive volatility, especially because the whales will be picking up each and every Bitcoin that you are ready to sell, or each and every Satoshi that you're ready to sell. Okay. Sticking with Bitcoin, again, Bitcoin volatility falls to a 2 year low as TradeFi markets wobble. According to crypto market data provider Kaiko, Bitcoin's 20-day volatility has come to equal that of the Nasdaq for the first time in 2 years. Wow! So first time in 2 years. That would be during COVID. During COVID, I think roughly when the markets were trying to like kind of pick up, and that's where the two of them met. Uh, but while Bitcoin's price has remained roughly the same since the start of September, both Nasdaq and S&P 500 have fallen 13 and 10% respectively since that time. Not a shocker. Not a shocker. This is either massive support or breakdown level for Bitcoin relative to the Nasdaq 100 days. Okay, all right. Um, as with its volatility, Bitcoin's actual price descended to late 2020 lows last week, after the core US CPI, which excludes food and energy, reached another 40-year high. Bitcoin and stocks both fell on the news. That was that little dip where the market cap went from 920 to 880, like that $40 billion dip, but quickly bounced back into their respective ranges. So these kind of little bit of shocks, um, what's going to happen now is the market is really, really fragile. Okay, it's extremely fragile. This is both Bitcoin and the US stocks and bonds and that market as well. It's very fragile. So a news like this does affect drastically with Bitcoin. Yes, it's volatile with cryptocurrencies. Yes, but it's more so with stocks as well. And now the good thing is that it's almost like a rubber band. Yeah, the more you stretch it, the more it'll come back into its the quicker it'll come back into its actual price range, which is a good sign of the market being, okay, where the bulls and bears are standing strong. This is that little, almost like a cold war between the bulls and bears, and this is that period that we're going in, and we're holding that really, really, really strongly. Um, it's good to see how it's really good to see how even during such traumatic times we're able to actually like help bring the price back up. So kudos to every bull out there. Meanwhile, the hawkish sentences of the central bank worldwide are beginning to turn bonds into volatile yet rewarding asset class. As Bloomberg reported last month, bond yields have been skyrocketing thanks to Fed policy, while DeFi yields have fallen under 100 points on protocols like Aave. Okay, interesting. Aave not doing so well, but Compound doing well. Keep an eye out on that, guys. Keep an eye out on that. Um, I guess this kind of makes sense, yeah. Like if you're looking at the central banks all worldwide, their government issued bonds or their central bank issued bonds are actually low risk and low reward. Yeah, so that's why they you should probably keep them as like 5 to 10% or 15% of your complete portfolio in them. Um, but if they're turning it into if they're trying to create higher yields from them or skyrocketing yields from them, there's one thing that you kind of need to look at is how long is this going to sustain? Like the Fed policy right now with increasing the interest rates constantly, there's going to be another interest rate pump. Again, I'm a little bit skeptical on that if it's actually going to happen or not because of the midterm elections in the USA. Um, but I think it will happen. Uh, so, how long are they going to keep pumping this kind of interest rates? So, depending on that, how much can you sustain on your high yields from your government central bank bonds is interesting. Okay, I'm gonna move on to the next one. Just take a second. Okay. So much Bitcoin news. Get ready for Bitcoin volatility. 5 things to know in Bitcoin this week. Bitcoin starts a new week, keeping everyone guessing as a tiny trading range stays in play. Spot price action has traders dreaming of breakout. Having come down significantly in volatile conditions over the first half of 2022, recent months have almost had an eerie lack of volatility. Again, no one's moving first. No one's moving first. Historically speaking, when the BVOL falls below a value of 25, a large spike in volatility tends to follow shortly after. It's stated in part of critical comments. Okay, so yeah, you generally see quite a bit of volatility happening. If you look at this here, you had this big drop. If it was here, you had this big drop in price. Um, Here again, you had this big pump in price, slight pump in price. Here you had a slight pump in price again. And right now, what are we gonna get? I don't know. It seems like even if there's a pump, it seems like it's gonna be like a fake out and move back down completely. 21,000 should feature as a part of a relief bounce only to be eclipsed by a fresh dive to multi-year lows for Bitcoin. These potentially are coming in at 14 to 16,000. That's exactly what I just said, yeah, in terms of these small pumps happening, like almost like fake outs or perceived, okay, yeah, we are going to, woohoo, we're staying there. I would say like if the bulls can hold a price point for a week, if the bulls can actually hold a price point for a week, then you could say that okay, this could possibly not be a fake out. But honestly, there's so much resistance at that 21,200 or 21,000 price point. Breaking that is going to be quite tough. Breaking that and holding that is going to be quite tough. Number two, fresh macro triggers line up for crypto. In the United States, company earnings will come in thick and fast, with tech stocks particularly apt to moving markets in the event of results falling wide of expectations. So this is when you're going to see the next quarter's earnings for a lot of these tech companies: Apple, Facebook, Google, yada yada yada, Microsoft. And if people see that uh, these companies haven't been doing as per what is projected or expected, it's really gonna like shake the confidence of the investors. So I think very interesting couple of weeks to go, up till mid-November, I would say. Beyond stocks, the US dollar index Dixie was mercifully motionless into the new week, so far avoiding another attack on 20-year highs seen earlier. Next up, we have RSI breakdown risk echoes 2018. In a tweet from the weekend, Halen flagged Bitcoin's relative RSI repeating behavior seen in build-up of the 2018 floor. Okay. So it's like when in doubt, zoom out kind of types. We have a similar pattern or wedge formation over here as in 2018, where we then had a massive collapse down to the actual floor price. How strong the bulls can actually keep it up at what it is right now is a real question. But even if you look at the 3-day RSI, I think that's what it's saying. Yeah, 3-day RSI has a very similar movement. Actually, you could say that there's probably uh, another little bit of a hunch and a dump before we could actually say that it's very similar. But I can see where it's going. Um, and hodlers stay as determined as ever. As I mentioned, in terms of the on chain data, there's absolutely no movement of like Bitcoin. You might have your small retail buyers, your shrimps, moving around their Bitcoins, but as far as it comes down, as far as it goes to actual movements in the market, there isn't much that's happening on chain. So that just means that a lot of people have just been holding on to their Bitcoin. If it goes down, it goes down. Woohoo, way, no worries. You know, and I think it's just come down to the number of people that actually do believe the same thing. If you don't, you're probably going to get out now because guess what? It's going to go down. Fear enters in its second consecutive month. Okay, I think the crypto fear and greed index has now had a sentiment in its fear, extreme fear, for 2 months straight. Again, we see that in correlation with all the other metrics and indicators that we have. This is definitely a very good time to buy, uh, especially if you're looking at it from a full cycle perspective, where you have Bitcoin and Ethereum pumping up, all going to new all-time highs and all that stuff. Which look at it from at least from a 3 to 4 year perspective. Huh. Okay. That takes us to the next segment of better US inflation. Okay, top economist David Rosenberg predicts US inflation will plummet below 3% next year and warns the Fed rate hikes are courting a disaster. The Federal Reserve seems intent on choking the US economy into submission despite the moving evidence that inflation threat is fading. David Rosenberg said in a pair of appearances this week. He noted He noted that delays in vendor deliveries have returned to pre-COVID levels. Okay, commodity prices have slumped into a bear market, and freight rates have declined sharply. Okay, so it seems like it's moving towards moving towards the um, some normalcy towards before the COVID times, pre-COVID times. Meanwhile, the U.S. labor market appears to be softening for young people, working mothers, and other key groups. Moreover, he said that the central bank might be trying to cool demand whether or not there's inflation, given its apparent disregard for the gloomy US economic outlook, the surging dollar, and lower commodity prices. Mhm. Okay, just gonna take a quick. Oops. Just want to check if stream's running fine. Yes, everything good. Our models show a headline inflation slicing below 3% to the next in the next slicing below 3% in the next 12 months from over 8% today. Rosenberg said that, but then it's gonna be too late to save the economy. And I would posit that the pose that the Fed has already done the overkills as is. It's very interesting actually, now that say that 3% below next year's. Okay, we're currently at like 8%, 8 point something, 8 something percent. And I don't know if generally what they do is they do this on a year on year basis. Yeah. Um, uh, it'll be good if they can take the inflation down to 3%. Um, uh, but I don't know how they actually do these kind of calculations and stuff. So something to keep an eye out on. Maybe good times ahead. Um, we'll see. We'll know. We'll know soon. Moving on to the next big, very positive news for the bear market right now. Uniswap's 165 million funding proves how user interest in DeFi is constantly evolving. And here's how, Uniswap Labs on Thursday announced its 165 million Series B funding round led by Polychain Capital. The deal is dubbed as one of the biggest deals ever conducted in the DeFi space, which, according to several crypto analysts, is proof enough of how the interest of investors in DeFi domain is evolving positively amid the bear market. Okay, that is fantastic news. You know, in his interview with Fortune, Adams further added on how Uniswap Labs is currently not profitable and will make use of Series B funds to expand its product offering to a whole new level. The funding will also be used for the company fund to make the company financially stable in the coming years. This is fantastic news. You know why this is such a fantastic news is that first of all, I feel like we've deserved it. You know, uh, first of all, I think that it's we deserve it, and more importantly, this is it's so good to see these kind of fundings, this kind of growth, especially in the bear market. You know, we are continuing to see this interest evolving and grow, is which is a super good thing, right? And we see that companies continuing to build during this bear market and taking like a Series B funding to expand their whole product line is fantastic from Uniswap. Honestly, like kudos to them. You know, guys, this is exactly why we need bear markets, and this is exactly what we need in bear markets. We need development, we need growth to happen. You know, I'm super excited about um, something like this. You know, and I'm so happy that it's happening with like a decentralized exchange rather than a centralized exchange like your FTX or your Binance, because these guys have it easy to grow. Um, but a decentralized exchange like Uniswap, really happy. Um, you know, it's really good. It's really good to know this, to see this happening for an exchange like Uniswap. Definitely, you know, with when it's like a bull market, you have these constant spike ups. You know, like it's very easy to get like 165 million at that point into into a company because people are excited. Like your grandma is talking about a cryptocurrency project. Your waiter like at the restaurant is talking about cryptocurrency projects with his mates on a break. um, like people at the gym are talking about cryptocurrencies in a bull market, and that's also susceptible to like rug pulls and stuff like that. Yeah, so and the reason why rug pulls happen during a bull run is because there's so much interest, and at this point, when markets are completely at the bottom, sentiment is low, there's extreme fear in the market. You have this dark horse coming out and loading up on like 165 million dollars, and you know what, using that to not become profitable but actually like expand its product lines and constantly evolve in the space is fantastic. And DeFi is without a doubt going to revolutionize um, the way we do banking. It's as simple as that. It's going to help a lot of people who don't have the access to traditional banks, who actually better off without it, to actually go on and like make something out of themselves, get loans, get, for whatever they want to start off with. And it's going to give them access to so much more funds. It's unbelievable, um, so seriously, very happy about Uniswap. I read this. I love the project. I love them. I have better connection with them for due to the investments I've made with them. But definitely, fucking a man, fucking a. All right, moving on. September CPI. Ikes, 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 Ikes. Sorry, guys, I got a little bit of a cough today. Inflation raised to increase to 0.4% in September, more than expected in than despite rate hikes. Okay. The CPI increased to 0.4. Yeah, is it inflation or CPI? It should be CPI. Sorry, guys. The CPI increased 0.4% for the month, more than 0.3% more than the 0.3% Dow Jones estimate, according to the Bureau of Labor and Labor Statistics. On a 12 month, 12th month, that's my cough, guys. On a 12-month basis, so-called headline inflation was up 8.2% off its peak of around 9% in June, but still hovering at the highest level since early 1980s. Um, the Federal Reserve has made it very clear that they're committed to price stability. They're committed to reducing the inflationary pressures, said Michael Mayer, chief US economist at the MasterCard Economics Institute. The more inflation comes in above expectations, the more they're going to have to prove the commitment, which means higher interest rates and cooling in the underlying economy. So it was predicted to be 0.3% higher, but it was 0.4% higher. So again, I feel like even though the midterm elections are coming up in the first week of November, I still think that there's going to be an in increase in the interest rates. I don't see that stopping at all. 8% inflation is ridiculous. If they want to bring it down to the 3%, they have to. Uh, they will continue to put the increase your interest rates. The rising costs mean more bad news for workers whose average hourly earnings declined 0.1% for the month on an inflation adjusted basis and are off 3% from a year ago, according to the BLS release. Inflation is rising despite aggressive Federal Reserve efforts to get prices under control. The chances of a fifth straight hike, three quarter point, 3.75 basis point hike, are also rising, with futures pricing in at 62% probability following the inflation data. Again, we only have to wait and see. I think the next meeting is um, mid-November, if I'm not mistaken. The next Fed meeting is mid-November. There was this urgent Fed meeting earlier, I think last week or 2 weeks ago, uh, where we thought maybe they're going to like pump it up again, but there wasn't actually anything of substance that came out from it. Inflation is able to run this hot in part because consumers have had very strong purchasing power. Consumers are still spending through these inflation increases, and the challenge thereafter is larger for the Fed to effect, effectively be able to rebalance the economy. Um, I guess, see, I mean, there's no way of actually there's no right way of actually curbing all of this in terms of getting the money out of the market, actually deflating the economy, um, and so on and so forth. There's we just have to wait it out and see write it out. And I think even from a 3 month perspective, I think it's a very short term to actually see the effects happen. Yeah, because they also did the inflation, the interest rate hiking in a staggered approach rather than just pump it up, bring the economy, slow down the economy, slow down the purchasing power of a lot of people, remove a lot of money from the market, bring the value of the dollar back down. Um, yeah, I think that would have been probably a better way of doing it. But again, uh, yeah, the, it is a calculated risk. Okay, moving up to smart money. Smart money. Precious gold prices rise as US dollars yields retreat. Gold prices gained on Monday, helped by a slight pullback in the US dollar and Treasury yields, even as fears lingered about a more hefty Federal Reserve rate hikes to tame soaring inflation. Uh, the 10-year bond yields have retreated a bit after scaling the highest since 2008 last week, lower bond yields reduce the opportunity of holding non-interest bearing gold. Uh, Okay, so this basically means that the return on the investment that you would get from gold is decreasing, and that's why people's interest is people are selling off their gold or getting off the gold bonds. Gold prices have fallen 20% since scaling above the $2,000 per ounce level in March as rapid Fed rate hikes weighed on bullion's appeal. See, um, exactly what I meant. Okay, still with smart money. This is one of the best articles I've kind of read in a couple of days. After accurately forecasting 2022's collapse, billionaire Palihipitiya says smart money is buying as the psychological turning point arrives. Okay. In a new edition of the All In podcast, Palahipitiya says smart investors or smart money with large amount of capital are re-entering the markets and the cycle is in the process of bottoming out. The All In panel points to an article in the Wall Street Journal that says a large number of venture capital firms, including Sequoia Capital and Anderson Horowitz, is at the level of, oh my God, how did I forget? Uh, BlackRock and, oh my God, how can I not recall? Another venture capital fund that I follow, and I also like look at what they're holding. So that's another tip, guys. If you are looking at ways of actually uh, betting on the right coins and investing in them, look at your um, big venture capitals and what they're doing and how is their portfolio in this kind of being um, uh, in this sector being split, and then copy that. Are now investing in public tech companies. Okay. Palahipitiya cautions that another move to the downside is always possible, but he points to the relative strength of tech giants like Apple as a sign that that a market shift is quietly underway, not under the way. Um, he said, "I think what it means in these companies are going to draw a hard line in the sand and say we're not over earning. Do not abandon the stock." That again will help put in the bottom in the stock market. Okay, so I agree again, but we are definitely going to see a little bit more of a bottom. Simple logic is our resistance or our support right now might be sitting at about 18,200, something like that. Um, and once that breaks, the next strong base would be at your 14,000, 16,000, and people who constantly keep buying, especially if you have companies this big coming into the market. Yeah. Okay. Uh, staying with smart money. Staying with smart money. High net worth investors prefer direct crypto investments over cryptocurrency ETFs. Data shows like ETFs is again not your keys, not your wallet. Your money is putting. You're putting. It's like you're putting your gold or your most prized possession in someone else's house and saying it's your property, but then that property gets bulldozed or something like that. uh, you don't have any right to actually go and ask for it, you know. It's not a big shocker. High net worth investors continue to be interested in investing directly straight into the asset class, according to the latest statistics of the Global Wealth Managers Survey from Global Data published on October 13th. Um, Cryptocurrency is highly volatile, so unsurprisingly, Global Data's 22 Global Data's 2022 Global Wealth Managers Survey found that the average global H&W portfolio holds just 1.4% in crypto, while demand is expected to grow going forward. Investors are also unwilling to let cryptocurrencies take up a sizable chunk of their portfolio. Hmm. Okay. Hmm. Interesting. Um, High net worth investors who consciously prefer taking maximum risk on crypto percentage. Do they mean that if they invest directly into the crypto firm, it's maximum risk? Um, I guess so. I guess that's what they mean. There are roughly about 21,000 different cryptocurrencies now in the market. Thus, investors have a wide variety of assets to choose from. Direct investment has the highest level of risk comparable to the other securities and thus the most reward. Uh, I agree. Okay. But in terms of risk, I think ETFs are a lot more riskier, um, just because of what I just said earlier. Like, you don't have access to your crypto. It's not your keys, not your wallet. Um, yeah. And again, talking about 21,000 different cryptocurrencies in the market, as I said, you're just looking at 500 cryptocurrencies that are going to actually win. Uh, just 500, dude. Like pick each different vertical of of crypto. Look at the top 3 or top 10 also in that matter. Look at how are they solving problems and which ones are better than each other. And based on that, you can actually kind of choose like a few in that sector or in that vertical and move on. Repeat the same thing. Um, Even while there are still money managers who are skeptical about Bitcoin and its future, consumer demand has pushed the hands of major firms. Okay. Uh, Wol Michael notes that it is crucial for businesses that they want to keep as much of their clients' capital as possible to provide both a direct path into investing into cryptocurrencies and an option to invest via a fund. Definitely, obviously, because these businesses obviously make a sizable percentage of profit when the fund does well or their client's portfolio does well. So definitely, they want to be the middleman to in order to make that money, um, but they don't actually lose when the fund is down. Yeah, I think we have another smart money section. This is very funny because a couple of weeks ago we were just talking about the exact opposite of this, on crypto potato itself. 75% of young US investors want to diversify portfolios with crypto. Okay. 75% of millennial and Generation X investors are fond of alternative investment tools such as crypto. Two-thirds of the polled American investors aged between 21 and 42, you're young, okay, I'm way in the middle of that, believe it's impossible to achieve above average returns relying only on traditional finance. Instead, they see cryptocurrencies as an appropriate tool for the job. Numerous previous. Uh, okay. Definitely, with traditional finance giving you, like, your savings account currently would probably give you, uh, let's say, a very good savings account would probably give you 3% max as a return. But you're seeing these DeFi applications. Obviously, there's some who say 20% and stuff like that, which is ridiculous. Hashtag Luna. But more importantly, you could possibly earn about 11 to 13% through these different DeFi platforms. Be very careful about them. Do your own research before you invest in any of them. But again, if you look at it from a returns perspective, also, um, you're seeing an easy. Let's take XRP's example for example, XRP is currently trading at just under 50 cents, and its all time high is at $3, I think, 3 point something dollars. So that's 6x there. That's 600% movement to get to that point of $3. Now your stocks are not going to give you that kind of returns, even if it's in 3 years, 4 years time. It's not going to give you that kind of returns unless and until there's a there's a stock that uh, um, just really shoots. Um, Diversification is the key. By the looks of it, most people from the older generations might not advise their children to interact with cryptocurrencies since they prefer to stay away from that asset class. Okay, millennials and their love for crypto. This summer, the investing firm Alto evaluated that 40% of American millennials are hodlers. The exact amount of people admitted owning stocks, while less than that reveal that they have exposure to mutual funds. Okay, so it's like crypto and owning stocks percentage of your portfolio is almost the same, and very less of your portfolios in mutual funds. I think everyone's like in that rush to get that next big push, how your portfolio can just 100x in a day, and that kind of like is what crypto why I got into crypto as well, from that FOMO, and then start learning about what it is, and getting to a point where okay, my investments are good, they're doing well, and start trading. Yeah, so I'm not too surprised about that. And finally, we end the day with this, yeah, with the Solana killer, Aptos. Aptos. Solana killer Aptos stirs hype and sharp criticism ahead of listings. Oh, yeah, I forgot I couldn't really highlight on this page. Anyways, with Aptos, one of the most hyped blockchains at the moment, celebrated its mainnet launch yesterday. Funded by numerous major crypto ventures such as A16Z, Jump Capital, FTX Ventures, and Binance, the project has been surrounded by tremendous expectations since its inception and titled the Solana Killer. Just to let you know, the project is a spin off from former Meta employees who worked on Libra in 2019, which was later renamed DM. Carpe Diem. Um, the new blockchain enables parallel execution. With this, a scalability of up to 160,000 transactions per second was supposed to be achieved. However, yesterday's launch was more than disappointing, as pointed out by pseudonym analyst Paradigm Engineer 420. Um, the transactions per second was only about 4 transactions per second yesterday. Also, most of the activity on the network was not actual transactions, but validators communicating, setting block checkpoints, and writing metadata to the blockchain. Um, the Aptos team justified that the current state of the network, uh, justify the current state of the network via Discord. The developers wrote that yesterday's 4 transactions per second did not reflect the maximum TPS. A low network load is normal at the start of the mainnet. As soon as user activity on the network increases, the blockchain will reveal its true scalability, Aptos stated. Okay, fair enough. We will have a look at it. The tokenomics of Aptos rise criticism before listing. With FTX and Binance, the world's two leading crypto exchanges and also supporters of Aptos, have announced that they will list the APT token tomorrow, today, Wednesday. Both will open trading for APT Bitcoin, APT BUSD, and APT USDT spot trading pairs at 1 a.m. UTC. Um, Yeah, the initial total, I think I had, anyways. The initial total APD offering on mainnet stands at 1 billion tokens, with 51% allocated to the community, 19% to the contributors, 16.5 to the foundation, and 13.48 to VC investors. The community token pool is for the ecosystem related things like grants, incentives, and other community grown initiatives. Interesting. I'm gonna keep an eye out on Aptos. Aptos. And what are they trading at right now? Aptos at $7.98. Gonna keep an eye out on this one. All right, guys. So that brings me to the end of today's live streams. Please do let me know what you did enjoy, what you didn't enjoy. I've been getting feedback from friends and family on how I could make this live stream a lot more engaging, a lot more better, and I really do appreciate it. So if you have any feedback, please do let me know in the comments below. And if you like the stream, do give this a like, because it really helps the algorithm on YouTube and on Creator Club. It's been a pleasure having you streaming on there, and hopefully I do this more often at Creator Club as well. All right, guys. With that being said.